What is up, guys? My name is Hassan and welcome back to another dividend investing #good investing. So I'm going to show you guys the S&P 500. So this is the S&P 500 and this is for 6 months. So the market has been doing extremely well in the last 2 months and we have been buying. The strategy that we're implementing is called dollar cost average. We are buying when the market is up and we're also buying when the market is down. It's just that when the market is up here, around here, we're buying less of it, and when the market is down here, we're buying a lot more of it. One of the reasons why you should follow our channel is because I'm not a person who only theoretically talk about investing. I actually do it in a practical sense. I implement what I say. So now I'm going to show you guys my monthly deposit chart. So this is my monthly deposit chart. You can see here I have June, July, August, September, November. All these deposits, December, January, are around 500 or less than $500 in deposit into my brokerage account. But as soon as the coronavirus hit in February, March, and April, I took advantage of it. I started pouring a lot more money into the stock market because this was an opportunity, a buying opportunity where we can dollar cost average. My point is that we're buying more, my point is that when the market is down, we're buying more, and when the market is up, we're buying less. But at the end of the day, we are still implementing dollar cost average. So today I'm going to be showing you guys what I've been buying and selling in my investing portfolio. As always, before we continue, I have to give you guys a quick disclaimer. I'm not a financial advisor, nor do I know you personally or your financial situation. I'm not responsible for any of your gains or losses in the stock market. My suggestions are only suggestions. That does not mean you go out and buy these stocks. It is just a place for you to start your own due diligence. For example, just because I buy something, that doesn't mean you have to buy it. What if I need the money for something and I decide to sell that certain company? Does that mean you're going to sell it? It's not a good idea just to blindly follow anybody on YouTube just because they're making that buys or sales. Another disclaimer I want to put out there for you guys is that all the information that I present to you guys are not mine. I get them from other people, videos, books, articles, annual report, newspapers, a lot of reading. The only thing that might be mine is my emotion and my experience. So let's get started. This is my Robinhood portfolio. It's currently valued at around almost $18,000. So we're going to take a look for 1 day. I'm up about 2.3%, which is about $400. And then if we take a look at it for the 1 week, I'm up about 4.4%, which is not bad. If you take a look at it for the 1 month, I'm up around 5.5%, which is about $933. And then if we look at it for the 3 months, you can see here, I'm down about 6%. And this is mostly due because of the virus. And as the market was trailing down, I've been continuously buying and dollar cost averaging. And for the 1 year, I'm down about 2.6%. In the stock market, you can lose money very quickly, which we see right here, but it takes a really long time to make that money back. So it dropped really quickly, but in order for it to go back to where it was, it's going to take a longer time. That's just a general rule in the stock market. As you guys can see here, this is my monthly deposit, how much money I've been depositing to my Robinhood portfolio month after month. You can see that majority of my deposit are less than $500. But here recently, February, March, and April, they've been a lot higher because of the coronavirus. So if we look over here on a monthly basis, I have December around 270, January 575, but February comes, the virus comes along, and I saw a very good buying opportunity. For February, I deposited almost $1,500, for March $1,525, and then for April about $2,715. And you can see here I have says stimulus check. That means that for the month of April, the $1,200 that I received from the government as a stimulus check, deposit all that into the stock market to buy more companies and invest that company. Alhamdulillah, all praise goes to the Most High. As you guys know, I work as a high school science teacher, and for the most part, our jobs are secure. We're actually teaching in a distant learning, or known as remote learning. So if I were to average these out, I'm averaging currently for the last few months, I'm averaging around $759 here per month. And my goal was for me to be able to deposit $425. You guys can see that I'm absolutely crushing it. So now I'm going to raise the bar a little bit higher. So we're going to make our goal of $500. Why am I not making it say $1,000 or $800? Because I want to be able to have a long-term sustainable goal that can actually follow through. I don't want to say I'm going to deposit $1,000 and then some months I fall short. I'm going to set a reasonable goal of $500. And if I can deposit more than that, it's a blessing. Another thing I want to point out is that the total transfer that I deposit into this Robinhood portfolio in the last 3 years is that $18,310, and my Robinhood portfolio currently has, with the dividends and everything, $17,921. So it shows here that I'm not down by too much. So here you guys can see all my buys and sells for the month of April. So if we scroll down, you can see here we bought about, for the month of April, we bought 24 different companies. And now I'm going to go through all my buys and sells for the month of April. The very first company that I bought in the month of April was April 1st, Johnson & Johnson. You guys all know about this solid company. We bought one share at $128, which was a great price. I wish could have bought more, but I was buying other companies. So next one we bought SPSK, which is a Islamic Sukuk. It's like a bond. We bought one share, and then we bought AMD, solid company. We bought one share at $43. And then we bought another pipeline company known as MMP, one share. We bought National Instrument, Tapestry, 2 shares, Emerson, and then we bought Escalate. Guys, check this out. This is one of the newer companies that I bought, known as Escalate. About 20 shares at $5.56. I bought MPX, 15 shares at $8.48, and then we bought Merck at 1 share at $81. So if you look at here, all these companies, they all have one thing in common. They all have, or for the most part, pay a dividend. So now before we continue on, I want to show you guys, talk about my unique dividend strategy. If you guys look here, I do a lot more of buying than selling because I'm still trying to grow my account. Buying long-term dividend company is really easy to do because I follow a very unique strategy known as dividend growth investing. For the most part, it's where I buy long-term solid dividend companies with little to no debt. And that way these companies are not paying any interest. That's one of my main priority, is to see if they have low debt or not, because I don't want to invest in a company that is already highly leveraged in the stock market. Stock market is already highly leveraged. I don't want to buy a company that is already in high debt. A common error I see in investors make is that they chase high yield dividend companies. So what do I consider a high yield dividend company? So I consider anything with 5% or higher as high yield or high risk. So now I'm going to show you guys one example of that. So the example that we're going to look at is the ticker symbol ENB and Bridge. So currently their dividend yield is around 7.1%. Automatically, this is I consider a high dividend yield. Automatically, this is a red flag. When a company has such a high dividend yield, that automatically shows me a red flag that I should stay away. Another thing I'm looking at is that look at their payout ratio. This is their health bar. So the payout ratio is around over 100%. This means that the company is actually giving out more money than they're actually making. So which is another big concern. So anything I would say that is over 5%, it's a red flag. We should stay away from it. So let's continue back on the companies that I'm buying. One of the reasons why you guys should subscribe to my channel is because I bring to you guys unique companies that no one else is talking about. So we have National Instrument. I bought 1 share. Tapestry, Emerson, Escalade, 20 shares. Check this one out, MPX. So I bought Merck, MPX, Escalade. So another company right here, which is VET. I want you guys to stay away from this company. Majority of my companies are solid companies, but this company, you guys should stay away. I would say it's way too risky. As I scroll down, you guys can see that I have one company that I sold, and that's called Beyond Meat. I sold it for $73.83. I know that this company is going to go higher. It's a solid company. It's a great company. The reason why I sold it is because they make artificial meat, which is great because I think that's the trend going on right now. But the problem is that as a Muslim, they make these vegetarian pork. A pork that is not pork, but it smells like it, tastes like it, looks like it, but it's not. So as a Muslim investor, I don't feel comfortable investing in it. So I sold out with it, even though I know it's going to do well. It's just that I have morals, I have moral conscience. I personally don't want to invest in it, even though I think has a great business model. Expedia, Foot Locker, bought another share, MMP, and then we bought another company here. Take a look. It's called CAL, CAL. And then we got another shoe company, more MPX. So another company I want you guys to stay out of it is HCR. I actually got burned by this company. I bought 100 shares, but stay away from it. And then I bought another share of Skywork Solution, one share at $92, which was a great price. I actually made an analysis video on this video. Make sure you guys check this out. I got Contour brand, a clothing company, because I know at the end of the day, even though their stores are closed, but I know that I believe in America and that continue on as time goes, where people are going to still wear those jeans and they're going to still go to work and they're still going to do their daily activities. So I'm buying this company that has zero debt. So majority of these companies have very low to zero debt. And then another one here, Ericsson. I actually collected their dividend and then sold out of it. The reason why it's in red is because that means I lost money on it. I had 10 shares. I got rid of it. I've been holding on for 1 year. I actually like Skywork Solution better. Another sale we have here, American Software, 10 shares. I sold out of it. It's in green, meaning that I made money. If you guys made it this far, I want you guys to make sure you hit the like and subscribe button. It helps the channel grow and reach out to more people. And then if we scroll down more, we bought Gentex, 2 shares, around $23. So now at this point, I don't want to bore you guys. I want to show you guys one of the methods I follow to analyzing a company. So we're gonna hop on to Seeking Alpha. I clicked in the ticker NATI. We can see that automatically their dividend yield is under 5%, which is good. It's not high. They're paying around 2.7%. And their annual payout is around $1. What's concerning part here is that their payout ratio is 86% or 87%, which is a little bit higher. I normally try to invest in companies that they have their PEs or their payout ratio around 50%, 50, 60, 40%, around that age. 86% is a little bit high, but I'm going to still stick with this company. Another thing we can see here that it has a dividend growth here for 16 years. So for 16 consecutive years, they have increased their dividends, and at the 5-year growth rate of 10%, which is solid, meaning that you're getting a raise of 10% in terms of 5-year growth. We're going to click on the dividend history, and we can see here, for the most part, from 2004, they're increasing their dividend consistently year after year for 16 years in a row. Another thing I like to look at is during the 08-09 crash, what did the company do? Did they cut their dividend or they increased it? Here we can see that they kept increasing overall. This shows that even though we're in the next recession or we're in a recession with this coronavirus, that they will continue to pay their dividend and they will be sustainable. So the next thing I like to look at is looking at their yield history. So this is their dividend yield. Currently, it's around 2.7%, but their 4-year average is around 2.33. So for the last few years, they were around 2.33%, but currently the dividend yield is actually around 2.7. So actually, we're getting a better deal in terms of their 4-year average. So we're currently actually we're buying this company at a discount or buying it at a better deal, around a 15% better deal, because we do 233 divided by 273 and we get a difference of almost around 15%. So we're getting a national instrument is paying us a dividend 15% higher than they normally do in their 4 years. So now at this point, let's answer some questions and see what people are concerned about right now. So here we have a question by Paul. His question is, what do you think of the current market situation? Do you feel it is recovering back to normal with the coronavirus not yet cured? So I'm going to pull up the S&P 500 again. So if you look at it, I think the market is already recovering. So we can see here for the last 2 months, the market is up around almost 22% or 23% in the last 2 months, March, April, May. So there are 2 months we're up, and I think that is going to continue to get better. As long as the virus situation improves and more people are going back to work, the market should do well. Another thing to keep in mind is that when the economy reopens, it will explode even if the revenues are lower than expected. People generally, there's no way of stopping this market. I feel that we're going to continue to go higher and higher because we have faith in America and the American economy. So guys, we're going to call it a day for today. As always, if you guys didn't subscribe yet, make sure you guys subscribe to the video, hit the like button. It helps me grow. As always, thank you. See you next time.